3%. Of course, a difficult year when provisions were still the main aim, perhaps not able to get as much when it comes to the debt picture as well for the lenders across the board. All right, let's take a look then at what the market is holding exactly right now. And it's very, very interesting across the board. If we go international first, of course, we'll usually start out in Asia, as that's where the market started things off. More than 2.33% better off is the Shanghai Composite in this afternoon trading picture, with the Hang Seng following suit, 1.2%. A bit of a mixed one out in Europe, though, with the FTSE 100, the only one going down at 0.2%. 0.2% is the CAC 40 going higher today. Locally, though, we're 0.25% stronger. Will we reach 69,000 points? I've mooted a whole lot about that 70,000 point mark. It doesn't seem to be coming, though, so that's going to be interesting. Industrials have managed to eke out more than 0.9% of gain, with gold miners going up, while platinum miners have gone down, pushing resources into negativity, unfortunately. And as we noted with the likes of Standard Bank faltering, it has meant that the banking count is 0.5% weaker, and so too financials. In terms of companies that have lost a bit, MTN has actually gone up today, 6.5%. Yesterday they came out with their numbers, and the expansion plan isn't necessarily outward into other parts of the world, but really more inward. They're looking to better their infrastructure as well as their network and fintech services across the continent, meaning that that entity is set to focus a lot more on sub-Saharan Africa and a little bit more on Nigeria. Still looking to repatriate as many funds as possible. They're owed around 4.2 billion rand out of Nigeria. They've only received 236 million, so still a whole lot of work to do out on that front. In terms of companies to have gone down, the likes of Amplats losing nearly 3%, 2.3% weaker as the likes of Anheuser-Busch InBev. Onto the commodities front, all gains across the board here, still petering below $70 a barrel as Brent crude oil, while in the currencies we're sitting better off and even below 15 rand again then against the US dollar is the rand. Carmen Mpelwane, who is senior equity analyst at Absa Asset Management, joins us now as we unpack just a little bit more of this market. Carmen, thank you so much for the time. Appreciate it. Good chatting to you on this Thursday afternoon. So Sanlam comes out with their set of earnings. We're just chatting to the CEO. That headline earnings figure, does that mask a little bit of how bad things could have been actually for them?
Yeah, definitely, because you have to compare it to the previous year, which is what the growth is based on. And there were some one-off charges that were taken in that year that obviously gave that very low base in terms of a comparative. However, having said that, net operating earnings were down 23%, but when you eke out the impact of COVID, it should actually have been up 14%. So definitely a significant impact from COVID as expected.
Yeah, it does get interesting here. I mean, the amount of provisions made, the issues that have been at play, particularly with Santam, of course, but does mean that the insurance industry has had to change the way it sort of does business. Is there still confidence sort of in that sector of the financial index that they will still be able to pull through, particularly with Sanlam being the biggest of them all?
Yeah, no, definitely. I think a lot of these insurances have done a lot of provisions. We were all learning on the go last year, but I think we've come out and we've seen, for example, Sanlam has a very strong balance sheet, number one. They were able to grow new business by 25%. So as much as there was a lot of negativity around the impact of COVID, I think a lot of these management teams have been able to regroup and in so doing benefit their companies.
Yeah, all right. Standard Bank then, down 43% goes the headline earnings picture on that front. Not too much of a surprise there, though, is there?
No, not really. It was very well guided to between 40 to 50% was the trading update a few days ago. So the market shouldn't be surprised on that front. I think there would be a lot of relief around the fact that the dividend still remains. And at a payout of 24%, that's still pretty quite decent.
Yeah, and what do you make then of the business? I mean, it continues to try and do as much as possible. It's still part of the relief plans for the economy in order to change things around. Do you think they'll be able to continue their business as normal and as usual and try to eke out that number one spot again ahead of First Rand?
Yeah, it's so difficult to say that anything will go back to normal. So I think, as I explained with Sanlam, a lot of these companies on the JSE have had to regroup, re-strategize and think of the new normal. So, for example, in terms of how people will move and more importantly for Standard Bank, how people will bank. And we are seeing the sway in terms of the contribution to performance that the rest of Africa has had for Standard Bank. So it'll be very interesting to watch that and see how they adjust to the new normal effectively.
Yeah. All right, let's talk the currency very quickly then. At one moment, we're near 15 Rand and 50 cents, and then we're at 14 Rand 96 today. I mean, the volatility of the Rand is always something we've continued to speak about, but boy, does it turn wild.
Yeah, no, definitely. When it goes up pretty fast. When it comes down, it's a very tedious, trajectory downwards. But the beginning of the week, a lot of that impact was from the concerns around the U.S. inflation, and that concern has come off. So you've seen the Rand track down. And then today's current account numbers from South Africa has definitely had another impact on the Rand.
How much impact then with the stimulus bill out of the United States, that $1.9 trillion that literally now just needs Joe Biden's signature effectively to come into play? How much impact will that have on the markets? And does that mean riskier assets like the South African currency will begin to improve perhaps a little bit more as more attention gets put to riskier assets?
Yeah, I think, we need to break it down to what the man on the street effectively gets. So that's about a $1,400 impact per person is what the check will be. So the one question would be, where is this going to be spent, number one? And number two is that we must remember that the stimulus package doesn't just include that check, it also includes some further unemployment assistance, as well as provision for vaccinations. And restaurants, for example, as well, are also included in the stimulus package. Bringing it back to the markets per se, overnight we saw the US turning into more value stocks. So we saw an uptick in value stocks and small caps, and a negative in the growth and tech stocks. So just give an indication of sort of what the market's reaction was from the stimulus agreement.
All right. Carmen, appreciate the time. Always good chatting to you. Certainly has been interesting, this market. And we'll see if things continue to go perhaps in an upward trajectory then to close out the week. Carmen Mpelwane, equity analyst then at Absa Asset Management. Your Thursday features continue, of course, here on